Welcome to the Exhibit A podcast.
We're on. Today we have Eszylfie Taylor, the most interesting man in Pasadena, perhaps. I can only think of one other guy that's even similar to you, and that's my good friend by the name of Stephen Yee, who I still don't think that I've had the chance to introduce the two of you guys together because you're so similar. So today we're going to be talking about insurance needs for people with family law cases, and we have Allie with us, our estate planning attorney, because she knows what goes on when insurance policies become an issue in probate court, and she's going to help me interrogate you, sir.
Sure.
Okay.
Bring it on.
We're going to test your mettle today.
All right, let's go.
Actually, I'm not sure that I can do that because your mettle is quite strong. I don't think I could even get near that. I want to talk about you first. Eszylfie, you and I met probably about maybe 5-6 years ago. It might have been in the elevator of this building here because you used to have an office here.
Yep.
And then we went out to lunch, and I remember you were starting your business. You had worked for New York Life. Mm-hmm. And all of a sudden, Taylor Insurance just exploded. You got your new building. You've been flying around the nation like a crazy man. I mean, you really are an amazing person. And I just, I went on the internet just to see what else I could learn about you. And this is amazing. You are the president and founder of Taylor Insurance and Financial Services. And as an insurance agent, and you told me this when we first met, you were a top producer at New York Life. In fact, you're a member of the $1 Million Round Table, right?
Yes.
A lot of people that don't know about insurance don't know how significant that is because that's just a small percentage of people that make it to that. Could you explain what that is?
So industry designation, $1 Million Round Table. Is probably the top 5% of producers globally. So it's not even a domestic designation. And then I happen to be what's called a top of the table producer. So the top of the table is the top 1% of the 5%. So I believe there's about 1,300 top of the table producers in the world. So it's a great honor to make that.
And that's just one of your many accolades. I also noticed here that I didn't know this is that you obtain a Series 6, 63, 65, and 7 licenses. In addition to the life and health insurance license, what are those licenses?
So those are securities licenses. So the 6, 63, 65, 7, all the numbers. Those allow me to do a variety of things from sell mutual funds, stocks, bonds, annuities, alternative investments, do financial planning. So in my practice, we take what I call a macro perspective. So it's not just about insurance or just about investments. We want to look at the whole person, the client's needs from A through Z, and we're able to serve them accordingly.
Yeah, I had the good fortune of being at the University Club recently and hearing a wonderful seminar that you gave over lunch, and you're definitely an expert on the topic. And what I love about you is that you know how to communicate to people in ways that they can understand.
Yeah.
And I don't know about you, Allie, but I always believe in the thing that if you don't understand it, you got to be really suspicious of it, right? Because there's a lot of people in your industry that seem to talk in language that most people don't understand, yet they have their blind faith where you break it down pretty easily. You've done that with insurance policies and all that when you've spoken to our staff here. Okay, so at the age of 22, you start with New York Life Insurance. So let's go back a little bit further. You grew up here in Pasadena.
Pasadena, local guy, yes.
Yeah,
yes.
And you went to high school at Maranatha High School, which is, I think, what I really felt like I had a bond with you because my kids went there. And I know that you were a star athlete. Here's what I didn't know. I knew that you played basketball. And I know that you are like a physical specimen. I mean, people, if you see this man on Facebook, he's like standing on his hands, just like it's like I'm walking on, he could probably stand on his hands easier than I could walk on my feet, right? But I also saw a clip of you like playing basketball with some retired basketball player, and you were like shooting hoops, and it was a boom, one after another. And I'm thinking, what does this guy not do, man? So you were varsity sports, and you competed in 4 varsity sports in high school, and then you were a notable collegiate basketball. You had a career at Concordia University. Just amazing. Now on top of that,
no more. It's enough.
No, I got to say this part because this is the thing that I think is amazing. Magna cum laude with a bachelor's degree in business management. I mean, dude, you are like, are you human? And then what I see now is that you're running around the nation. You're on LinkedIn, on national television, and all this stuff. So I guess before we get into our topic, I want to know, how in the world do you do it? Is it just natural talent, or are you like do you sleep?
See, it's interesting. I would tell people ask me that, do you sleep? And I say, very well, right? By the time my head hits the pillow, I'm exhausted. I think for me, it's funny with all the accolades and been quite blessed. I'm arguably the biggest failure you've ever met in your life. And
I want to hear this.
I'll say that in the sense that I have failed every way you can fail in life, right? Once, and I learned from it and got a little bit better. So I don't believe in winning and losing. I believe in winning and learning. So the reason that I've achieved all of these things is because I haven't been afraid, right? They say fear is false expectation appearing real, right? So I just attack everything, and I'm not afraid to fail. Matter of fact, I want to fail big. Real big, because the bigger I attempt to fail, then that gives me an opportunity to succeed. So, from my planning practice, I think at this point I own like 6 companies, and between my nonprofit work with my organization and others that I'm affiliated with, and I'm a certified yoga teacher and all these things, really it's all about connectivity. That's the common thread. I'm in the business of building relationships with people and helping people. That's what I do, and so that's why I'm not tired. Look at my life. It stinks I just had a breakfast meeting with a good friend of mine. I'm here sharing ideas with you. I'll have a lunch meeting with another colleague. I'll do a radio show this afternoon. I'll be with my kids tonight. It's like, what stinks about my life? It's busy, but it's constant engagement. It's constant connectivity, constantly helping people. And the more success that I've had, the more money that I've made, the more notoriety that I have, and the less I care about how much I'm making or what I get out of it, and the more I give, then just the more I'm blessed with, right? If I have a problem, I'll give you one area of vulnerability. I have a problem saying no. That's why
you're here today, right?
I'm not good at saying no, right? But
thank you for saying yes.
So yeah, but no, I there, and so I'm taking all of those. I'm taking all the good things, yes, all the things I've learned and all the positive things, and I think my clients get more out of my failures and more out of the things I've seen go poorly. Right, because I can tell them this isn't theory, this isn't something I read about, this is my life. I've lived it. 19 years I've been in this industry now, and so I could share the good, the bad, and the ugly. But you mentioned it, you hit the nail on the head. It's about authenticity. Like I'm saying, this is the deal. And I think if you give people the information to make educated decisions, empower them, then that's it. Then my job is done. Whether you do everything I say, half of it, none of it, your prerogative. But you'll no longer say I didn't know, or no one explained it to me, or I wasn't aware of my options.
Right. Yeah. And I have to hit on this when you talk about the work that you do within the community. You have this annual golf tournament.
Yeah.
That's a success.
Yeah.
In the day and age where golf tournaments are like waning, nobody's doing them anymore. But you figure out the formula. I've gone to one of them, and I was amazed at how well you do. And that's just an example of some of the things you do for the community.
Yeah.
You also raise money for kids, or you?
Yeah. So I have my own nonprofit, Future Stars. So that's my charity basketball camp I do. I've done a golf tournament every year for the last. This will be our 14th year doing the golf tournament. This is my first gala, so we've got a gala coming up. I believe you're coming to that.
I am coming.
So we have a gala that we'll do, and so the camp allows me to bring in kids from all over the area and teach them basketball and life, really, right? The last few years we've done well enough where I've raised more money than I need to run the camp, so I've created a scholarship fund. So I've named the scholarship after a couple of great clients of mine, the Dr. Ludlow and Ruth Creary Scholarship Fund, where I'm able to help kids finish high school, finish college, right? And so it's been an amazing journey. And then other things, it seems like the Unifier's Children. I sit on the board of the Los Angeles Committee for March of Dimes, and then also Los Angeles Children's Hospital, Ronald McDonald's house.
You're killing me,
right?
man.
So
we thought our lives were busy, man.
Yeah. You know what it comes down to, though? It comes down. It's a choice. It all comes down to choices,
true.
right? When people said, "Oh, I'm too busy, I can't," I guarantee you, if I told you, "Hey, there's a winning lottery ticket at my office, can you come today?" I bet you get there, right? And so it's just a matter of choice and priority, right? Yeah. So no, but it's been a blessing, a wild ride. I'm only 30-11. You do the math on that. So I've got a little ways to go, and I'm excited. Like I'm loving life, loving this journey, love the relationships and helping people. Yeah.
Cool. Okay, well, let's get into our topic, okay?
Sure.
Again, it's insurance needs for people with family law cases.
Sure.
This ain't the first time that you and I have spoken about this, because you've actually come and given training to my staff in past occasions. So, first of all, can you tell us what type of life insurance products are available for people? I mean,
Sure.
I think I kind of have a little bit of knowledge, but you're the expert.
Sure. In a general sense, to just make it simple, there's 2 types of insurance. You have permanent insurance and you have term insurance. Think of permanent insurance like owning a piece of property, right? A popular form of permanent insurance is one called whole life. So your premium price is fixed at the time of purchase, very much like a fixed mortgage, right? You buy it, premium price is fixed, it's guaranteed, it's never going to change. As you're paying that premium, the policy also builds equity. It builds a cash value. And you can access that cash value in life. So it's similar to like when you're making a mortgage payment, you're building equity in your home, right? It's a bit of a morbid joke that I tell, but permanent insurance is the only insurance product you buy that I guarantee you'll use, right? I guarantee you're going to take cash out of the contract or you're going to die, right? So that's the idea. So in addition to that death benefit, there's a living benefit there, right? The policy accumulates cash value. So a permanent policy is the one form. Whole life is one popular form. There's another type of permanent policy called universal life. Whole life is fixed, right? So if your premium payment's $500 a month, it's $500 a month. Not going to be more, not going to be less. Universal life allows the insured to have flexibility in premium payments, right? So maybe I'm in a business that's a commission business, or I own my own company and my income can be cyclical. I can set the premium payments based on affordability. So it allows me to adjust the premium payment. In a whole life policy, the cash value grows by the issuance of a dividend, which is more of a fixed, guaranteed, predictable outcome. And universal life can be fixed interest, index, that's the performance is tied to the performance of an indice, or variable, where you're actually buying mutual funds in the policy. So there's a lot more in the way of flexibility and nuances that the insured rather has. So in determining which type of permanent insurance is best for someone, I tell people, if you want a predictable outcome, I want to know that if I give you $1, I'm getting $2 in return and I have a guaranteed death benefit, then you buy whole life. If someone says, I'm okay with probability, I'm okay knowing that if I give you $1, I might get 4 or 5. I might not, right? But I like that the upside's there for me. There's a greater level of probability. Then you can look at a universal life type chassis. And then lastly, you have term insurance. Term insurance is like renting the insurance. Your coverage is set for a fixed period of time, a term. 1 year, 5 years, 20 years, 30 years, premiums level. There's no cash value. There's no equity buildup, right? It's like your car insurance or homeowner's insurance. You don't die in that term, thanks for playing, right? But it gives people the ability to get larger sums of coverage, generally at a lower price. So my job as an advisor is to help guide people to which product or combination of products, work best.
Yeah, and that takes some time for you to sit down and actually learn about people and find out what their needs are, what their abilities to pay and things of that nature.
Yeah.
So I guess my next question is do you have any suggestions to people as to, what's best for them?
Yep.
And I think you've already kind of answered it. It depends on the person.
It depends. There's not a cookie cutter, hey, everyone should have X or everyone should have Y. There's this one concept that I'll share with you, and it's called human capital. And I don't think most people are aware of that. What is that? Human capital is the present value of your future earnings. The present value of your future earnings. For example, if I make $200,000 a year and my family needs $200,000 a year to pay tuition, pay the mortgage, keep peanut butter and jelly sandwiches on the table, right? My human capital is the amount of income my family needs on an annual basis multiplied by 20. 200,000 times 20 is $4 million, right? That's how much life insurance I should have. Why? Because if I died and a $4 million check was delivered to my family and they said, okay, well, now what? If you got a 5% return on $4 million, that would generate $200,000 of income in perpetuity, thus replacing my income. And here's the challenge, and here's why I say human capital is important, and most people don't recognize that. The same guy, the same gal that makes $200,000 a year will go buy $1 million policy. I got $1 million of coverage. It's a lot of money. $1 million is a lot of money. But when you break that, so let's get this straight. You make $200,000 a year, you've got $1 million policy. That's 5 years of your income. So if I'm 40 years old and I've got an 8-year-old and a 5-year-old, right? And I only provide 5 years worth of my income. My 8-year-old gets to 15 or 13 rather. My 5-year-old gets to 10, and then the money runs out. Then what? Right? So just having that conversation with people like, oh goodness, I didn't think of it. I didn't think of it that way, because maybe they thought $1 million was the right number because that's the balance of their mortgage. And they go, look, if the mortgage was paid off, then go, okay, mortgage is paid off, okay, but what about property taxes and insurance and car payments and tuition? Right? So those are some of the dilemmas. So most people, I'd say 99% of people are underinsured. When you take a look at What do they make in a year? What does their family need in a year? Multiply that number by 20. So even if you have coverage, you might have a great plan. The question begs, is it enough? If you owned a house that was worth $1 million, would you insure it for $200,000? Would you buy a $200,000 homeowners? Most people say, well, no, I wouldn't do that. Why would I insure my house for a fifth of its value? Right? Well, then why do you buy insurance that represents a fifth of your income earning potential?
Yeah. So you said something about the product. Are there some products that you would know that, hey, people shouldn't get? I mean, you're in the business of knowing what good life insurance companies are out there versus
I mean, in a general sense, you want to work with a good, reputable company. I mean, there's a slew of strong ones out there. There's ratings. You want to look at A-rated companies typically or higher. Little known fact is insurance companies are amongst some of the strongest financial institutions in our country, right? 2008, at least in my lifetime, arguably is one of the worst economic years we face in our country's history. If you look at all the banks and financial institutions that failed, not one insurance company failed. Why? Because their mantras are old, conservative, and dull. Because their reserve requirements are very high, right? I don't know if a lot of people don't realize this. Insurance companies do not pay taxes on premiums received, as they are quote unquote reserves for future claims. So they get to bring in billions of dollars of premium, not pay taxes on that money, and reinvest that money.
Okay.
Right.
That explains it all.
Business.
Right. And so whereas a bank, conversely, a bank can lend $10 for every dollar on deposit. So they're highly levered, right? And people go, oh, but don't banks have FDIC? FDIC, a lot of people don't realize, isn't a government agency. It's a private company. It's just government backed, right? Did you know that FDIC has 1 penny in reserve for every dollar they guarantee? So forget a cataclysmic failure of the banking industry. If one major bank failed, they don't have enough money to make good. I don't know if you remember this, right here on Lake Avenue. I remember 2008. I was up the road. IndyMac Bank was right here.
Oh, I remember that.
And I remember people outside lined up on Lake Avenue right here wanting their money, and the bank saying, maybe we'll give you 50 cents on the dollar today. I don't know if you remember.
I actually didn't know that happened.
Yeah,
wow.
but I mean, there's a line of people out there. But so that's the value in finding a good, strong insurance company. You want to make sure they're going to be there. They're gonna pay. But in a general sense, most of the big boys all have really strong financials. I don't really believe in perfect products. I believe in perfect planning, right? So I think when people talk about, I'll even expand beyond life insurance and annuities and mutual funds and stocks. It's not that they're good or bad ones, because I hate annuities or I hate this life insurance. No, someone sold you a product that did not match your objectives. That's what happened. It's not that the product was bad, right? It's that someone sold you. So if you said to me, hey, Eszylfie, liquidity is really important to me. I want to invest with you, but liquidity is really important to me. I want to buy a second home in 2 years, right? And you invest your money with me, and I put it in a product with an early penalty for getting out, right? And then you call me in 2 years like, Eszylfie, I found my dream home. I need my money. And I go, okay, Don, you can have it, but you got to pay a 7% penalty to get your money. You're like, what? There goes you going online. These investments are a ripoff. They're horrible. It's not that the investment was a ripoff. Someone put you in a product that did not match your declared objectives. That's what happened.
Okay.
Because perhaps for someone with a long-term time horizon, that product was great. You see, so for me, knock on wood, I want to tell people the right thing for them, not what's best for me or how I make money. That may mean that I don't make a sale with you today. I might say, you know what, Don, based on what you're telling me, I don't have a product for that. Keep it in the bank.
Okay,
right?
well, let's talk about specific products. Go ahead, Allie. Go ahead.
It's also important, though, that product fits in with your portfolio of products, right?
Sure.
Because, for at least for my clients, like I really like at least some insurance, some life insurance, because guess what? It comes quick.
Sure.
You know? And so even with very large estates, to know that you have $500,000 that can come
Liquidity.
as soon as you get that death certificate to start paying bills.
Yeah.
It's really important.
It's tough, right? Because even you look at quote unquote net worth, and we're here in Southern California, my clients who've made their wealth in real estate, it's not uncommon for them to have maybe 5% or less of their total net worth liquid.
Absolutely.
Not uncommon, and probably the same of a business owner. So they're quote unquote worth 10 million, 20 million, 100 million. How much cash do they have? I have a huge client of mine, easily worth over 200 million, maybe has 4 million in liquid investments. right? Now he's got good cash flow from his real estate, but when we're talking about just cash, so when those bills have to be paid or estate taxes have to be paid, right? Are we looking at forced liquidation of property? Are we looking at forced liquidation of business interests, right? And these are the things. Are we forced to take loans and cash advances at unfavorable rates because we have to?
Yeah, you're making decisions in a crisis situation as opposed to strategic.
Versus having this money on hand, now you have options, you have choices, right? And that's the most important thing. But you bring up a very good point. It's about not. I can't sell someone in a product in and of itself with this myopic view. For example, if you said, "Hey, Eszylfie, I'm interested in insurance. What should I buy?" If you ask any advisor that question and they start spouting off products, go walk the other way, because the very first thing I'm going to say is, "Well, I need to. What else is going on?" Right? What income are you trying to replace? What other investments? Have you done any other planning? Because I want to fill gaps, not just sell products. Yeah. And that's the most important thing. And it may very well be, you know what, Don, you're good, right? The products you have, the plan you have is good. Maybe I tweak this or change this, but you're good. Now it might be oh my goodness, circle the wagons. We got a lot of work to do. We got to do. But I don't know. It'd be like going into your doctor's office and saying, "Hey doc, what kind of surgery should I have?" Like, how about I ask you some tests, run some tests, and ask you some questions first? I don't know.
Let's change it. Let's change the topic a little bit and talk about what my client's coming up to you and says, "I just got a spousal support and child support award." Yep. Okay, and I'm afraid that my soon-to-be ex-husband's going to pass. Sure. And I've got to raise these 4 young kids, until they're 18 and graduated high school. Yeah. Is there some type of a insurance product that I could get for that? Sure.
So obviously a permanent one's never going to run out. So depending on how long that spousal award is to be given, then I'd want a permanent policy. I'd want a policy that doesn't ever run out. If it's for a particular period of time, if I say, hey, my kids are 8 and 10, and this is going to run till they're 18 and then it's out, maybe I buy a 10-year term, right? At least for that period of time. So the need, and you alluded to it earlier, your need and affordability dictate the purchase decision. Okay. Right? How much coverage? I always start with need. Before I even get into the product type, how much coverage do we need? I want to satisfy that first. Then second to that, well, what's your budget? How much can you afford for planning? And then that'll dictate the best course of action.
Okay. So when a person has a child support need that needs to be insured, do you have any feeling about who should own the policy? Whether it's the guy who's making the support payments?
Yeah, so it's interesting, right? There's naturally, we might think, if I said, how many parties are there to a life insurance policy, you might go, well, there's one, isn't there? There's actually 4. There's 4 parties to a life insurance contract. Now, more times than not, it actually is one person, but here are the different parties. You have the owner, you have the applicant, you have the payer, and you have the insured. There are 4 parties, and they do not have to be the same. For example, if my ex-wife was supposed to provide spousal support or child support to me, and I go, I want to make sure if she dies and get in a horrible car accident that I'm paid, right? I want to get a $2 million life insurance policy in her. I can own the policy. I can apply for the policy, right? She can be the insured, and she can even be the payer. Or I might say, heck, if she's refuting to pay the premium, I want to protect my own interests. I can be the owner, I can be the applicant, I can be the payer, and she can simply be the insured.
Okay.
Right? So depending, again, I mean, obviously if a divorce or a family law matter is contentious, you probably want to err on the side of caution and say maybe I have more control. Theoretically, though, it can be done anyway, but that's one common thing. You don't need to go, my ex-husband said he'd get it. I hope he does, or I hope he pays the premium. No, because if I own that policy and then the premium notices are coming to me and the policy details are coming to me. And most importantly, the insured has no rights under the policy. It's only the owner. So if I own the policy and my ex-wife is the insured and she gets pissed off at me, okay, I own the policy and I'm paying the premium. Now, if she's the payer and she stops paying the premium, I'll at least be aware of it. And I'll go, this is not happening. I'll pick up the premium. Or no, there's a court order mandate here that you are going to continue to pay this premium, and I know you didn't.
So this is maybe where I intersect with Allie's expertise here. So sometimes in our judgments, we'll have a provision that states that if the policy lapses for non-payment, then the person who was supposed to receive the benefit can go into probate court and get it from the estate. You know, what was left over. So, how does that work? I mean, is it something that's likely to work? You know, or it's just, I guess it depends on how much of an estate there is, right?
Sure.
Yeah, that's right. And that's what you're relying on, right? I mean, you can't get blood from a turnip. So if there's not enough in there, you're going to be out of luck. Also, you have to make sure and get in to probate court within a year of the death.
Oh.
And that can be problematic. While a year seems a long time, in that first year after someone passes, you know, it can go quick.
And then the courts are backed up and all that.
So it sounds to me like you want to have control, like you were saying then.
I'm a hope for the best, plan for the worst. So if I can have control, then that would be ideal. I would want to own the policy, but the mistake people think, geez, I own it, that doesn't mean I have to pay for it. Nope, not necessarily.
Right.
I can own it. Right, I can own it. The other party can be the insured and the payer, but I can still own that contract, right? So that's one way to have some control or know what's going on.
So that's another thing is we're talking about ownership. Sometimes in a divorce, we look at all the assets, and as we're getting to the bottom, we go, oh, there's these life insurance policies, and they may be whole life insurance policies. Sure. Yeah, one party wants it, the other party, you know, eventually the court makes some orders. Let's assume that it's in the name of one spouse, but the court awards it to the other spouse. How does that work?
Yeah, so ownership of a contract can be changed at any point too. So if a contract's issued one way, right, it can be changed. Obviously, everything has to be done, it's just to clarify, everything has to be done at some point with the consent of the insured. And by that, I mean, I can't go, Don, I don't think you're the healthiest guy in the world. I'm going to take out a policy on you, and you're not going to know, and I'm going to pay the premium. When you kick the bucket, I'm getting paid. It cannot happen. You are going to, at some point, have to acknowledge, sign that application, acknowledge, you know, whether it's taking an exam or answering medical questions, you're going to have to know about that policy. The other thing, there has to always be what's called insurable interest. Right?
I was just going to ask you that. Tell us what that means.
Yeah, insurable interest just means we have some connection. Now, it doesn't mean that we have to be married. It doesn't mean we have to be related, but we have to have some insurable interest. So, for example, if the next building, Don, I buy is going to be down here on Colorado Boulevard, and you say, you know what, Eszylfie, I'd love to buy a building too. Let's partner up. Let's go. And we're going to buy a $5 million building. I'm going to own 50%. You're going to own 50%, right? We might buy two policies, one $2.5 million policy on my life, one $2.5 million policy on your life. So that if something happens to me and I die, right, now there's $2.5 million of liquidity that goes to our LLC to buy out my heirs or vice versa. So even though we're not related, the insurable interest is that we're business partners. We own a piece of real estate together. Again, I can't walk down the street and go, wow, look at that guy. He doesn't look healthy. Looks like he's overweight, eating donuts at that. Oh, yeah, come here. I got a proposition for you, right? Because the insurance company is going to go, what's the nature of your relationship, right? Yeah. Like, you know, and so that's the, you know, that's.
So do the insurance companies determine then what's an insurable interest, or is that something that's also governed by maybe the law, the government or something?
Now, the thing about policies, not to encourage people to try to defraud the insurance companies, there's something called the contestability period. A contestability period is the first 2 years that a contract is taken out. If the policy is issued in the first 2 years and there's a death, right? The insurance company has the right to investigate that. Was there foul play? Did we miss something on the application? Did you misrepresent something, right? And if they find that to be the case, they'll generally speak, they will not pay the death benefit. They will refund your premiums to you. After 2 years, it doesn't matter what happened. You could have lied. Suicide has to pay.
Okay.
Has to pay.
Okay, man,
right?
You're always one step. Well, listen to this. You're always one step ahead of me. So last time that we talked about insurance, we talked about suicide.
Right.
Not that we want anybody to do that or not.
Yeah,
but
you're committing to that one, literally. But yeah.
But if somebody has life insurance, you know, and they're against their life or whatever, and they commit suicide, it still pays
after
out.
2 years. I've paid 2 claims, 2 suicide claims, and yeah, so it pays, right? So. That's the contestability period there. So there has to be insurable interest, and it comes down to what you're putting on the application, right? So the larger face amounts of coverage you're applying for, the more scrutiny the insurance company is going to have. So if I apply for 500, and you think, well, what does that mean? Does that mean 10,000? Generally under 5 million even, then the underwriting isn't all that stringent. Once you get 5, 10, 20, then we want to see financials. We want third-party verifications on things. But under, 5 million, most certainly under $1 million, you can kind of, whatever you kind of put, they'll So, for example, if I said Don and I are business partners and we bought a piece of real estate, they're not even going to ask for a copy of the LLC or corporate docs. But I'm saying now, again, you don't want to. I'm not again advising anyone to fraud the insurance company, but that's just the underwriting process.
But still, if Don died within the 2 years, they'd question it, right?
Sure, but they wouldn't even necessarily question our business relationship. They would question how'd he die.
Yes. Yeah.
So if he died and again, it could happen. You could get a horrible car accident. Mm-hmm. You could have. I've paid a claim where a gentleman died after 8 months. I bought a policy. At like 6 months later, his kids call me like, my dad's policy's in force, right? And I'm like, yeah, it's paid, right? And he got lung cancer, boom, gone, 8 months. And the insurance company did. So your experience in the death claim being paid out real quick, I guarantee you those are policies over 2 years.
Yes.
Because
Without
when the policy's over 2 years, you submit the death claim paperwork and a death certificate, 5 to 10 business days, depending on the carrier, you got your money. If it's inside of 2 years, they're going to look. And those ones can take several months, if not longer. And really the only hang up there's not that they don't want to pay. They're going to order attending physician statements. They're going to look at, if they're going to want to see the autopsy, what happened.
I had a claim denied because of that. Mm-hmm. It was within 2 years.
Yeah.
Wow.
Yeah.
Well, listen, we're going pretty long here. I wish that we had 30 more minutes because this is like fascinating.
All day I get to be here.
So I want to change the topics a little bit to something that's perhaps a little bit more interesting. And this is a story about, and I want to get your professional opinion about this as an insurance expert. This best man takes bets on when a couple will divorce and announces it in his wedding speech. And this is a true story. So here's the story. Okay. Wow. It starts off by making a speech at your best friend's wedding can be a daunting prospect, and the pressure to be equal parts funny, entertaining, and inspiring, while also including a few tear-jerking moments is high. Now, we've all been there, right? There's some great speeches that are made at weddings. So this gentleman really put some work into it. What he did is he goes to a bunch of the people at the wedding party before the wedding, and he starts taking bets as to when these people are going to divorce. And so he says that he wasn't really intending on hurting anybody's feelings because he had a punchline at the end of this, and what he was going to say was, well, of course, nobody expects you to get divorced, and so therefore this money will never be cashed. But he actually collected money, and he did this thing. So he says the basic idea is that the participants guess a year in which the couple will divorce and put it a certain amount of money. It's kind of like a football pool, I guess, right?
Yeah,
and stuff. Anything wrong with that so far?
Okay.
Okay. And then, and so what happens during the wedding ceremony? He starts getting into it, and all of a sudden, people start booing him and sissing, and the bride starts crying, and apparently his best friend doesn't talk to him anymore.
Wow.
So. What's your professional opinion about that? Was that something this man should have done?
Ouch. Yeah. No. That's a rough one, right?
He definitely doesn't get invited to dinner, right?
It's interesting, right? When you look at it, and you guys probably know the stats better than I, but what is it, 50-some-odd% of marriages end in divorce? So theoretically, could happen. So
this is why I'm asking you this, because you're an insurance guy. Can you insure a marriage?
So it's interesting. So years ago, I thought about divorce insurance, right? What if you could pay a premium, right, for divorce insurance that would maybe pay a lump sum settlement payment for you or pay ongoing child support? Yeah. That's the thing. The challenge that I ran into from an actuarial, I think the preponderance of use would be too high.
Yeah.
Right? And so, because the utilization rate would be too high, because insurance companies are in business to be profitable, right? For example, your average workman's comp policy, right, has 60% profit baked into it. So when you pay $100,000 of workman's comp premium, the insurance company anticipates $440,000 or 40% or less utilization. That's a nice profit margin. Health insurance, 1 in 8, right? Homeowners insurance, 1 out of 50. These are the numbers. So they're collecting premium. Again, remember, not paying taxes on their premium either. And that's their game, right? And again, claims will happen, calamity will happen, but the insurance companies are masters of actuarial science, and they want to sway the odds in their favor. When divorce is over 50%, right, the house isn't winning on that one, right? So I wouldn't see them creating an insurance product, Although I've thought about that before.
Okay, well, if you ever change your mind, let me know. Okay?
Yeah, I'd have a liner on the corner.
So, Eszylfie, thank you very much for joining us. You are really an interesting guy. I hope that we can get you on the show. I know I'm going to be on your radio show in a couple of weeks, and I can't wait for that.
Yeah.
So thank you, and don't work too hard, my
Yeah,
friend.
no,
Okay?
I appreciate it. Thank you for having me on the show. It's been a pleasure.
Allie, thank you again.
You're welcome.
And thank you for joining Exhibit A. We'll see you next time.
Exhibit A is produced by David Lindley at the law offices of Donald P. Schweitzer in Pasadena, California. For more information, visit us online at PasadenaLawOffice.com and all social media platforms.